Let's take a look at Nio's Q2 earnings. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the hoodie to prove it. And today we are having a look at Nio's quarterly earnings report. If you haven't seen anything about it yet, let me just tell you from the start. It is very good. Now, we did expect this to be a good quarter as we knew how many vehicle deliveries were made, but it's very good. I'm very happy with what's happening. So today we're going to go through all of the important information in this report and how I feel about the company as a shareholder. It's only 50 shares, it's nothing massive, but I do like the company. I want to speak a little bit about what needs to happen going forwards for Nio to be very successful. And I want to make sure that we're aware of the risks, my concerns going forwards as well. Because pretty much with all EV companies right now, there is substantial risk associated. There is a lot of things that have to go right. But that is what we're going to be covering today, people. Right before we get into the video, can I please ask you to smash a like on this video as it genuinely helps me and the channel out so much. I would really appreciate it. If you're new around here, hit that juicy red subscribe button. Join the family. We just broke 21,000 subs. You know, join in. And drop me a comment down below. Let me know what you think about Nio as a company. If you're involved, what you thought about earnings. I always love interacting with you guys. With that being said, guys, let's get straight into the earnings. Nio reports unaudited second quarter 2020 financial results, okay? This literally only came out a few hours ago as of recording. Now, I'm going to go through the numbers in dollars just because it's a little bit easier for us all to follow along. So quarterly total revenue reached $526.4 million. Quarterly deliveries of the ES8 and the ES6 were over 10,000 vehicles. Now, we did already know this, but still, that is very substantial. To me, this next thing is potentially the most important thing in the entire Q2 earnings report. Quarterly vehicle margin reached 9.7%, and we will get into why that is so important very shortly, but that is incredible. And a quarterly gross margin reached 8.4%. Right off the bat, happy days. Now, before we go through the entirety of this, I actually want to bring you over to a handy little article. So, Nio Q2 2020 earnings, shares surge on a massive beat. I am recording this about 4 hours before market opens. We're already up over 8%. That is after going up nearly 6% yesterday. For the 3 months that ended on the 30th of June 2020, Nio earned a revenue of $526.4 million, okay? We bet consensus. We absolutely smashed the first quarter of 2020. We absolutely smashed the second quarter of last year. And I mean absolutely smashed. And again, we delivered over 10,000 vehicles, corresponding to an annual increase of 190.8%. And when you pair that with this vehicle margin, things start to look promising. But again, look, Q2 2020 deliveries, over 10,000. Q2 2019, 3,500. Also, they reported $1.6 billion in cash and cash equivalents for the quarter. That's a good thing. That's what we want to see. You may remember Nio issuing new shares, okay? Announced that it will offer 60 million ADS. We will get to that later on, okay? Previously, the company raised capital several times this year. Nio raised $435 million by issuing convertible notes. This is something that generally people don't like to see, but look, it does put the company in a much better cash position, which is something that a company like Nio, who is definitely not by any means in a fantastic position yet, needs to do. And we smashed EPS, okay? They reported 16 cents negative EPS, and the consensus was 26 cents in the negative. Absolutely smashing stuff. And that is why I do actually think today will be a massive green day. The same quarter last year, EPS was negative 45 cents. I mean, it's getting a lot better, people. Remember, Nio is a growth stock. We don't value this. We can't value this the same way we would traditionally value blue chip companies, for example. So seeing these kind of trends, to me personally, is really important. One thing before we really get into the quarterly report is I want to speak a little bit about this, okay? June 2020, Nio completed the offering of 72 million American depository shares, each representing one Class A ordinary share of the company at a price of $5.95 per ADS. Nio plans to use the net proceeds from the ADS offering mainly to fund its cash investments in Nio China, as well as other working capital needs. Nio absolutely burns through cash. There is no two ways to say it. 2018 burned $1.4 billion. 2019 burned $1.6 billion. Since going public, Nio has burned cash, but things are starting to look better. And I'd also like you to keep in mind that Q2 isn't traditionally the best quarter for EV vehicles in general. Usually it's the last quarter of the year, even the last 2 quarters of the year. So we could be looking at a promising end to the year as well, all going well. I would very much hope so, because after such a good quarter that came in really uncertain times, if we are now to see a poor quarter, or even if we are to considerably miss estimates, I would expect it to not be very good at all. But we know that going into Q3 so far, we're doing well, okay? The 3rd of August, we got the disclosure of how many vehicles they had sold, and they had delivered 3,500 EVs in July. So things are looking promising going forwards. Now we'll get to some more of the details. I won't go through everything because we covered a lot of what is important. But again, if you look here, deliveries, 2nd quarter, high. 1st quarter, now obviously this was a relatively unique time, but low, traditionally low. 4th quarter, traditionally the best by far when compared to these examples that we have here. So we could be in for a very exciting year, people. This here, okay, the vehicle margin was 9.7% compared with negative 24.1% in the 2nd quarter of 2019 and negative 7.4% in the 1st quarter of 2020. What an absolutely incredible turnaround. I don't think I can speak about this point here enough. So total revenue, okay, 526 million as we said, representing an increase of 146.5% from the 2nd quarter of 2019 and an increase of 171% from the 1st quarter of 2020. Gross profit, okay, the fact that we have a gross profit is saying something for this company. Traditionally, we have not had gross profit. Now, it is $44.3 million. It's nothing crazy, but there is a gross profit being posted. In RMB, that's 313 million, okay, representing an increase of 817.3 million RMB from a gross loss in the 2nd quarter of 2019. That is tasty. That is very, very nice. Gross margin was 8.4% compared with a negative 33.4% in the 2nd quarter of 2019 and negative 12.2% in the 1st quarter of 2020. Margins have gotten so much better. The company is actually starting to make profits on their sales. Beforehand, it cost them more to sell a vehicle than the cost of the vehicle. Now they are starting to make revenue. That is massive. Absolutely massive. Now, with all that being said, loss from operations, okay, $164.2 million, okay, in the 2nd quarter of 2020, representing a decrease of 64% from the 2nd quarter of 2019 and 26.1% from the 1st quarter of 2020. Still far, far better than the position we were in. And again, the net loss, $166.5 million, a decrease of 64.2% from the 2nd quarter of 2019 and 30.4% from the last quarter. So key financial results, and we won't worry about the actual amounts. What we will worry about is the percentages. We've already gone through that vehicle margin, which genuinely I think could be the most important thing to take away from today's video. It is this close to double digits now, and if we are to post double digits, that's going to be very, very nice. Total revenues up 171% quarter over quarter. Gross profit or loss, there's a gross profit, okay? There's a gross profit, people. And then all of the losses are down 25 to 30+%. Year over year, they're all down nearly 65%. All in all, guys, I think we should all be very happy with this if we are investors. And judging by what the shares price is doing, I think we are all very happy. So some comments from the CEO and the CFO. We expect to deliver 11,000 to 11,500 vehicles in the 3rd quarter as the momentum continues. And if that is to happen, I mean, guys, honestly, the future looks very, very bright. It will almost begin to not be a speculative stock. It will almost begin to, become a relatively safe stock. If they get to a stage where we are regularly posting actual profits and net profits, if the margins keep getting better, if the vehicle sales continue to go up on a yearly basis, that's going to be happy days. The current constraints on the productions will be lifted in the near future, and we are confident that our production capacity can meet the accelerated demand of our models. Obviously very important. Also important at this stage to understand that Nio doesn't actually make their own vehicles. So Nio uses a state-owned automaker, JAC Motors. Now, they did have plans before to build their own gigafactory essentially. We'll have to see what happens going forward, but as of right now, they don't. So beyond the strong order growth, we are proud to reach a milestone quarter with respect to the key financial metrics of the company, highlighted with the historically high vehicle gross margin of 9.7%, lowest ever operating losses, and more importantly, a positive cash flow from operations for the first time in our history. We will continue to focus on improving operating efficiency across the company. Meanwhile, we stay committed to investing in the technologies and services to provide our users with the best products and experience in the future and to strengthen our leadership in the smart EV sector. Fantastic. So the vehicle margin significantly exceeded the target, which was 5%, which you may well have known. This was disclosed a while ago, attributed to the increasing scale, higher average revenue per vehicle, reduced material costs, and improved manufacturing efficiency. Additionally, we have demonstrated our capabilities to generate positive cash flow from operations through the continuous improvement of our operational efficiency and our significantly optimized cash flow management. We will continue to enhance our efficiencies across the company in the rest of 2020 and beyond. All in all, guys, very nice quarter. Now, other sales as well, okay, $33 million US, an increase of 147.7% from the second quarter, and this was mainly attributed to increased revenues derived from the home chargers installed, service package and energy package subscribed, and accessories sold, which were in line with the increased vehicle sales in the second quarter of 2020. Okay, now some very important things here. The cost of sales alongside the gross margin, they're obviously extremely interconnected. So the cost of sales, okay, in the second quarter of 2020 was $482 million, representing an increase of 69.2% from the second quarter and 121.2% from the first quarter of 2020. But it's clear to see why. It was driven by the increase of delivery volume. Obviously, your cost of sales go up when you deliver more vehicles. Gross profit, okay, the reason we were able to post an actual positive gross profit was mainly contributed by increased vehicle sales and incurrence of the one-off cost in relation to the company's voluntary battery recall in the second quarter of 2019. So the vehicle margin, what happened here, okay? It was mainly driven by the decrease in purchase price of certain materials and lower unit manufacturing costs attributed from increased production volume of the ES6 and the ES8. So this is where things are getting better right now, and this is where we want to make sure we keep seeing improvements going forwards. That is what ultimately is going to fill us investors with confidence, and is exactly what will make the company grow. Because at the end of the day, guys, if a company is not growing, your investment is not going to grow. It really is that simple. Now, operating expenses, I'm not too worried about it. Your standard research and development, general administrative, loss from operations we went through, down 64%, 64 beautiful percent points. And that is what you need to know about the quarterly earnings, people, okay? Now, we've already gone through this, what they want to do next quarter, 11,000 to 11,500 vehicles delivered. And total revenues, okay, they'd like to be between 572.9 million and 596.2 million, representing an increase of approximately 120.4% to 130% from the same quarter 2019, and an increase of approximately 8.8% to 13.3% from the second quarter 2020. And if this is to happen, it's going to be fantastic. And if we do post that profitable quarter, I am going to be very confident in this company. All in all, guys, we are very happy investors today. So realistically, we just covered a lot of the positive that is going on. Now, I know I didn't cover Nio as a business very much. I do have a full video going through that if you want it. But what I do want to speak about is my concerns. So if you do know about Nio, you'll know that obviously they offer this battery swap service, which can be very good because you can literally get a brand new battery in a matter of a few minutes instead of having to charge it. They also offer this, the free valet driver service, up to 15 times per plan's duration, where literally somebody will come and pick up your car, charge it for you, and bring it back to you. Now in China, I think what they are doing is very good, very useful. China is insanely densely populated, people. A lot of people live in massive apartment complexes, okay? They can't install a home charger like a lot of people in Europe or the US have the luxury of doing, say for example with their Teslas. There is an awful lot of people in China who can't do that, so things like this are very necessary. There are pros and cons to this, okay? One is obviously there is more infrastructure involved. It can potentially be more expensive. There's more man hours, etc, but it is providing a relatively necessary service. What obviously needs to happen in the future, guys, is Nio has to leave China, okay? You cannot just stay in China. There's a whole world out there to go and take over. We need to see them hit the US. We need to see them hit Europe. Now, this doesn't have to happen in the next year or two. I don't even think it needs to happen in 3 or 4 years' time. But down the line, it will have to happen. And a concern will be, will their business model suit the rest of the world? Or is it made specifically for China right now? Now, it's not something I'm going to get too worried about, okay, because there is a lot of time for them to adapt. And you know, businesses run differently in different parts of the world. So the way they run and they perform in China may well be different to how they decide to run over in the US or in Europe. So I don't think it's the biggest concern, but it is just something I want to make people aware of. I do think expanding will prove difficult when the time comes. But again, that time hasn't even started to happen yet. We're nowhere near that time yet, but as a long-term investor, I mean, I'd love to hold Nio for decades. You have to think that far down the line. What I do have to say though is I think that they have put themselves in an incredibly strong position to grow now and to truly become very profitable in a short period of time. Potentially by the end of the year, okay? By next year, I would definitely expect that to be a reality. And to see an EV company doing that very quickly I expect that will absolutely fill people with confidence. Yeah, the stock's price is still going up another 8.94%. You'll love to see it, people. You'll love to see it. But guys, that is pretty much it. That is what I think you need to know about these Q2 earnings. But please do remember there are risks associated with this company. Remember, when I first looked into this company, I didn't like the look of them. I had to do a lot of research into this company to get to where I am today and to get to the level of confidence I have in this company. So don't blindly invest in this company or any other company for that matter. There we have it though, guys. If you watched until the end of this video, you, my friend, are a true legend, and from the bottom of my heart, I appreciate you so much. The support the channel has been getting lately is truly mind-blowing, and I genuinely am just so appreciative, so thank you. If you did enjoy the video and you got some value out of it, please do hit that like button if you haven't yet. Subscribe if you're new around here. Join the family. We upload an awful lot. And please do drop me a comment down below. Let me know where you stand on this company, where you stand on Nio. But anyway, guys, I hope you all have an absolutely fantastic day. I will see you for the next video. Peace.